Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. G'day listeners and viewers across the country and welcome to another episode of Street Smart Property Investing. We've got a really special conversation we wanted to deliver today. I'm joined by Mr. Trent Durrington. Thanks for joining, Phil. Good on you, mate. Good on you, mate. Look, guys, we've got a really important topic. There is a looming crisis hitting the Australian building industry, and I felt it was our responsibility to bring it up as early as possible. There is certainly a problem looming for countless people that are, have entered contracts, build contracts, are in the process of doing a renovation or their own build or whatever it may be, because we know that many of those contracts aren't very well controlled. We know that most of those contracts aren't fixed price, and we also know that the cost of building a property, the cost of the materials is rising at an alarming rate of knots. Give the viewers a little bit of an insight as to what we're learning, mate.
Well, mate, you've been watching my radar. Very concerned to how quickly it's moving. In simple terms, on standard houses at 250,000 have been increasing just in supply costs at $6,000 a month since February. So, call it roughly 10% price increase to this point, and what a major undersupply of materials still. The biggest being timber frames and trusses, and many stories of a typical house would buy as a square metre rate based on a 200 square metre house. You'd times it by $58 a square metre. Mm-hmm. That's risen to $100 a square metre, and they're talking. I think you may have read some of the stats as well. Another increase of 20% here in the short term. Mm-hmm. And I'm privy to bill of quantities from the builders, and they show me line items of the increases, and there's 79 items that have had substantial increases in the last 6 months.
Yeah, it's crazy. Now, I have seen you, react to every little bit of knowledge that you do get each week. You're very closely connected to the building community. You've, had key roles on major, within major development companies, understanding the costs of, producing, 200 and 300 houses a year, the scope of works, the importance of getting those estimations right. So it's pretty alarming for you to watch what's happening, right?
I guess the builders we deal with, they understand I'm a licensed builder as well. Mm-hmm. So I can drill into the detail and understand what their estimators are going through, mm-hmm. What the suppliers are saying. Mm-hmm. So you're right. I guess I've got some intel that others wouldn't have. Potentially there's going to be builders that'll go to the wall, which is terrible for our industry. It'll be hard for clients that have signed contracts and can't build houses, or even worse, in the middle of construction. It's a crisis. It is a crisis.
It's a crisis that's looming, and I don't think many people understand what's coming. I think there's a heightened awareness by the banking community, by the funders out there. They're starting to look very closely at the risk profiles of certain, kind of construction types, builders in certain locations, and the types of product that they're building, having different risk profiles in their eyes. Of course, what we're seeing, mate, is we're seeing a broad-based boom, which has partly contributed to this, because typically when we go through a boom period in the housing industry, which is always happening, there's always somewhere booming. Sure, yeah. Typically, whether it's trusses or, steel or whatever those materials may be, typically the the supply, the excess supply can be pushed into the state where that growth
the
is
boom
occurring.
typically nationally as a whole, the whole country's not booming at the same time.
Correct.
It's state to state, city to city, and they can move materials around. And then you put that, but that's nationally. But we're competing internationally because we've got countries like
That's
America.
the big thing, right?
Yeah,
Now talk to the listeners about the 3 ships last week.
Yeah, so ships about to offload here in Australia have had a phone call from
This is timber from Canada.
Yep.
Highly anticipated, much needed timber coming in from Canada.
And the US have called them and said, we'll pay you 4 times as much. So
turn them around and bring it back.
Bring it back,
right, yeah.
So an already undersupplied country, and you're competing with countries that are going to pay 4 times as much.
Correct. And we're hearing that whilst our timber, the price of timber in general, I know roof trusses have, I think, slightly more than doubled in price, and the price of timber is per lineal metre has gone up substantially. I don't know the exact percentage.
Oh, it's close. Call it double.
Yeah.
A typical frame and truss, which is a builder would put in an order for frames and trusses, and in the one purchase order, so to speak, it's doubled.
Wow.
Yeah.
And we hear that in America it's gone up 400%, and there are further price rises expected for timber in Australia. We're faced with the problem of bushfires that have diminished some supply. That was last year. One key mill that burnt down, I believe. Another one that was closed down that they're trying to, get open and get active again. A bit of a general undersupply of timber available to us in Australia. The forest, the pine forests and so forth aren't mature enough to keep up with the current demand levels. A whole range of factors contributing. So we're relying a lot on Canada and those other key countries that we can import from, but we just can't get access to the
the frame and truss companies are only working towards 60% capacity. So that's the busiest time we've ever had, and they're only operating at 60%. So it's a bit scary.
So the interesting thing is, what does this mean for the investor or the viewer? Somebody that's going through a construction process. What we believe is the thing to be I guess aware of is the fact that a lot of people, given that grant that has been so popular, I think they expected 27,000 people to apply for the grant, and yet there was more than 120,000 that applied. I believe 121 may have even qualified for the grant. 121,000. Now that's a lot of people entering into this process. We're hearing about major builders that are thinking about cancelling contracts, not even going ahead with the builds, because the one thing that we've learnt, the one thing that was kind of surprising for me, not so surprising for you, but to learn over the years that I've known you, that the margins that these guys work on aren't that big. They need to have a certain volume, a certain scale of amount of houses they're producing, because there's not huge profit margins in it. So if building prices change by 10%, pretty much
it erodes their margin.
Yes.
And the tier 1 builders that are monitored by the governing building authorities, be it whatever state, and their books are audited every quarter, and if they see builders are building for less than, say it is the 10% margin, 12% margin, they get a big smack, and the licenses could be frozen. So although the builders are not trying to
they certainly want to make some profit.
They want to make some profit. Yeah, it's frustrating because the market has struggled for quite a number of years. There hasn't been any price adjustments. Granted, the home builder has been a huge success. It's creating jobs. There's a lot of positives.
The interesting thing is the building industry associations across the country are calling it a profitless boom for the building industry.
Yeah, right.
A profitless boom. No profit for the building industry. A boom, but a profitless boom.
Yeah.
That's an interesting outtake of kind of what the feedback is by the people that are seeing this in real terms by the builders, where they're entering contracts, they're excited to have so much work coming on, fighting to get the deals, fighting to get the finance, getting it all together, mum and dads that are excited, everything locked together in these contracts, house and land contracts. And then as we're seeing land's only just now registering. These people are starting to gear up, ready to, to build many of these properties, and yet the cost to build the property may be greater than what their total budget was, including their profits.
It's a crazy time. I mean, bloody hell, in our industry, I guess, the last 2 years, COVID, we thought, the banks were saying the market was going to come back 30%. It's gone up 30%.
Yep.
Building starts have increased astronomically. Property prices are going through the roof. They're going to continue.
We've never seen so much competition in the market.
Yeah.
Investors they're struggling to get in the market. There is so much competition from the owner-occupier.
Yeah. So I guess the takeouts are that these people that have ended house and land contracts and are building with these builders, the value of their dwelling's going up. So everything's fine there. It's just some of the clients that potentially haven't had fixed price, not our clients, mum and dads that haven't had the correct contracts, could see themselves in a bit of trouble. And
we worry about the scenarios of people that have entered contracts that aren't fixed price. They think they are, but if they read the finer terms, the builders, fortunately for the builders, they're now able to adjust, delay, extend, do all of those things that we typically try to minimise the variance, mitigate those risks for an investor. But a lot of people are quite exposed to that.
Yeah, no, that's right. So, I'm thankful that we deal with long-term relationship builders. Mm-hmm. They're tier one builders. They understand the security our clients need. Mm-hmm. And on the flip side, we appreciate their business as well. We don't want them in trouble.
Well, but there's a unique thing going on there as well, mate, because the unique thing is, because of your relationship and somewhat my relationship as well, depending on the which builders we're talking about. Sure. But the reality is that they give you an open book. They give you a look. They give you a chance to see the numbers. And I know now that you're working with those building companies, the thing that's impressed me most over the last couple of days has been their openness to allowing you to work with them to control contracts in a way that protects the investor, and in a way that helps protect the builder as well, and then allows you to view every costing inside of that building contract. And if there's savings to still be made at the end because of the allowances that have been made, they're letting you adjust those contracts. It's a unique thing that I've never seen happen before, and it's very much relationship based.
100%. It's it's like any long-term relationship, right? There's give and take, and we're in for the long run. So they appreciate the type of properties that our clients need, and the protection they need. So it's, there's some positives that come of it, but it's just for the listeners out there that just radar's got to be up.
Radar's definitely got to be up. One of the things that's got to happen is we've got to forecast what's going to happen. The cost of building is going up. The clients that we've been working with that have been fortunate enough to enter the right contracts at the right time, pre this change in market conditions, there's a big bonus in that. The people that can get in now, that have the ability, that are finance ready, can get access to the land, can get into the right contracts. I think some of the people that we've been working with in recent weeks, there's maybe $30,000, $40,000, $50,000 worth of benefit immediately just in what we're learning is going to happen over the next couple of months. But moving forward, I think there's people, like I said, they've got to have that radar up. Yeah. Got to know you're entering the right contracts, you're controlling the elements that you need to control. But it all looks like house prices are just going to continue to rise.
Yeah, it is. I just hate to, there's so many layers that we could talk about, and the knock-on effect. We're in a housing crisis. we've still got an undersupply of housing, no rentals.
Alarming undersupply, a crisis where
Yeah.
we're trying to figure out how are we going to supply enough housing to put roofs over heads.
Well, there's been zero stimulus for the investor to build investment properties to help the housing crisis. So
help those renters, hundreds of people that are missing out on rental properties every day.
Yep. So, it's...
and yet if they brought that stimulus out now, you know, I mean, it may make it even harder or worse at a time in the market when, you know, I mean, there's a real squeeze, a real pinch point on being able to get materials.
Yeah. So I guess it comes down to any listeners that are, you know, setting themselves up to or think they're potentially ready to invest. Now's as good a time. Pricing's going to go up. We don't know about the regulators and will they try and slow the market and
this is funding, you mean?
Funding,
yes.
Yeah,
you know, the banks are certainly going to be, they're going to have their radar up as well.
Yeah, so it's probably going to get harder than easier. You know, so there's still a lot of positives that have come of it, you know, because there's a housing crisis. We've got to build more homes.
Put the crisis aside, there's never been a better time to buy. No. There's never been a better time to invest.
No.
This is the best window to build wealth that I've ever seen, which is just the frustrating part of it because, you know, the people that I have some influence over and I help and I, you know, try to, you know, be the captain of a little team of investors as to where we're buying and what we're buying and what we're doing, I've never seen such a good time to be investing. And yet, like I said, that's another new challenge comes up. All of a sudden, it's just the optimal time to, you know, to invest in real estate, but now there's a real problem producing it.
It is.
That's crazy, right?
It is crazy.
Look, well, mate, I think there's going to be plenty of offshoots to this conversation, but I appreciate you coming and sharing that, you know, that insight into this looming building crisis that, you know, all of us need to be able to navigate, you know, and keep ourselves safe and protected. So thanks for starting to share that conversation.
Yeah, mate. Good.
We'll come back and we'll touch on other elements of it as new news comes to hand.
That's it.
Good on you. Thanks for joining us, listeners. Let's talk on that topic a little bit more very, very soon. Thanks for watching, guys. Don't forget to subscribe and also feel free to leave me a question. I look forward to helping as many property investors as possible. Take care and we'll talk soon.